On now to the next topic of discussion. The Finance Ministry has clarified on reports about the possible introduction of a merchant discount rate, MDR as we call it, on UPI transactions, saying they have no plans to levy MDR charges. Paytm share prices took a big knock yesterday, the single biggest drop since February of 2024. On this clarification, strong clarification coming in, I think the stock price was down about 5 to 6% yesterday. Let's get that up once again, the Paytm share price. Pranav Gundapale, the senior analyst, India Financials at Bernstein, is with us. And in a bit, Abizar Divanji will also be joining in. Pranav, for now, it's a sentiment knock, but does this alter your earnings expectations for Paytm and even PhonePe? They're planning an IPO, perhaps, in the near future. Will this affect the prospects of PhonePe?
An MDR on UPI was never a base case scenario for us, and therefore was not modeled into our numbers, and therefore our numbers for Paytm doesn't change. And we've always held the view that MDR on UPI is a very low probability event, almost unlikely, not just because it's a populist move, but more because the ecosystem as a whole has seen significant benefits from the zero MDR and therefore the exponential growth in cashless payments. And it would not be wise to risk that growth in the pursuit of charging MDR, right? So I think as a system, the benefits are significant, be it in terms of reduced ATM transactions, increased credit opportunities for banks or payment players, or reduced printing costs for currency printing costs for the government. So the overall benefits are already significantly higher than whatever revenue could be earned through MDR. Therefore, we don't see a possibility of it coming through. And for Paytm specifically, I think they are close to break even. We expect them to break even next quarter, even without an MDR on UPI. So we don't think that changes our outlook on Paytm per se.
Gentlemen, morning, Pranav and Abizar. I think, so Pranav's point is clear. This MDR on UPI reintroduction was never in his base case. And the benefits of keeping it free far outweigh any collections, etc. Right? And in terms of collections, the Payment Council of India, etc., have said that government incentives are about 1,500, but the cost of maintaining UPI-related infrastructure is about 10,000 crores. So there is a big gap in that sense. Abizar, your thoughts on this issue? And was this a realistic assumption to begin with? I mean, is there a need to do this? Once this became free, UPI, of course, has become the payment of choice. If you reintroduce or bring forward a small charge, will it really hurt UPI and significantly dent UPI volumes? Your thoughts?
Oh, yes, it will dent UPI volumes, obviously. India is a price-sensitive country in that sense. But think about it, if you have such a large cost that you incur, and I know it's compared to currency cost, etc., it is much less. But the fact that you incur such a large cost would not make any long-term sustainability possible. So ideally, what needs to happen at some stage is that for above a particular threshold, maybe you can say 500 rupees or something like that, there needs to be some charge that could come in. So today, for example, people who pay hotel bills, or people, restaurant bills rather, or people who pay for certain utilities above a particular amount, or people who go to, supermarkets and purchase stuff off UPI. Those are the people who should be incurring some kind of cost. And I think I'm in favor of having some reimbursement or some MDR charge on it. What I'm not in favor of is, say, small street vendor type payments, people whom you've got into the banking system or into the formal system. Those kind of payments, I think, will become more sensitive to any non-payments. Take a threshold, I take 500, you could take 300. But whatever threshold one takes, I think there has to be some charge at some stage. Otherwise, sustainability is always a question.
Because the government provides whatever it provides through the budgetary support, right? I mean, obviously, it's not enough. It could provide more, perhaps, in that sense.
No, that's what, you can provide something through budgetary support, but budgetary support is not sustainable models. See, what you really want also is that while there is UPI and there is government-based UPI, there are other service provider models that are emerging. There are the likes of Paytm, as we have somebody on there, or there are similar other models. And I think sustainability, investment in technology, avoiding of risks, investment in cybersecurity, etc., will require some level of business model to be in place. And like we are a Robin Hood country, so you have large transactions trying to subsidize smaller ones. That would make business models more sustainable.
Robin Hood country. Point taken. Pranav, just reflect on some of what Abizar said. From a regulatory, long-term sustainability point of view, what's your sense?
Yeah, I think there are two parts to this. One is the regulation part, and second is the competitive intensity part. So even if, let's say, RBI and NPC and government agree and bring in an MDR, our view is it will go down the route of the IMPS transactions or the NEFT transactions, where in theory, there's a charge which could be applied for transactions, but for all practical purposes, most banks have waived it off. Because today, let's say MDR is allowed. There is a long list of banks who really want to get back into the payment space, which they realize they have ceded to the fintech platforms and would be happy to subsidize zero-cost payments. So one is the regulation part itself. Second is the competitive intensity, where we've seen that these are completely replaceable products. I mean, if we saw that when regulatory actions hit Paytm, customers moved almost instantly to other platforms. So there's no switching cost involved. And therefore, the ability to charge would be quite minimal. The way it is visible is if you look at some of the other internet platforms, take your food delivery or e-commerce, they've already started flexing their pricing power by introduction of platform fees, search fees, and whatnot. We don't see that really playing out in the payment space, which tells you of the pricing power that these platforms have, which is pretty much non-existent. So online transactions, maybe yes, because you don't have the cheap option of cash or zero cost option of cash. Maybe there's some pricing power there. But for offline transactions, we expect it to remain near zero. And this is the same we have seen in other markets. Like if you take China, for example, where it was a duopoly, there was no restriction on charging MDR, but still the offline transaction costs or MDRs were nearly zero. So the chances of any big revenue upside, while on paper it looks massive, right? I mean, if you charge a few 2-3 basis points on the volume of transactions, it'll have significant impact on EBITDA for Paytm or PhonePe, any of these businesses. But the probability of that playing out seems to be extremely low at this point.
No, absolutely, got that. Pranav, when you began by saying the cost, the benefits outweigh cost. Have you done any analysis? And you said there'll be if some cost is put on, banks will waive it off. There's enough banks wanting to gain back a market share, which is ceded. Have you done any work in terms of what this some of the biggest players are able to do by offering this free of cost and make up in terms of revenue otherwise in other segments, lending, etc.?
Yes. So we have done the analysis. So for example, let's take banks, the different stakeholders. The cost savings for banks in terms of reduced ATM transactions, the ATM transactions have come off by 30-40% from the peak, pre-COVID peak. And the cost saved there would almost be equivalent of earning about 10 to 12 basis points on the UPI transactions. So that's the amount of cost savings that they would have enjoyed. So they wouldn't want to risk it. Similarly, for the government, simply the reduced printing cost would be equivalent of 2 to 3 basis points of UPI transactions, merchant transactions. And that's close to what they are actually paying out as a subsidy. The other revenue addition that banks have got is simply the ability to lend. So if you look at the business banking growth that many of the banks are seeing, some of that or a large part of that is being enabled by the transaction history that is now being generated, which allows them to underwrite those customers. Lastly, the payment platforms itself. Now, while yes, there is a cost involved in providing the payment infrastructure, the fact that a Paytm is able to break even today tells you that there are other ways of monetizing, be it in terms of providing loans to merchants, the sound boxes where they earn a revenue. So people have figured out other monetization avenues, and that seems to be enough to break even. Now, you need to therefore look at it as a whole and not as a single service that's being provided. It's the same as ATM transactions. ATM transactions are free in the country, at least for 5-6 transactions. There is definitely a cost involved, significant cost involved. but nobody gets charged because the bank earns money in a different place. They get cheap savings accounts, which is the revenue source. So we need to look at it at a holistic level and not just based on the payment transactions. And if there is one particular entity that's incurring more cost, then I think it boils down to their negotiating power in the ecosystem and therefore the ability to charge and earn a revenue.
Well put. Abhisar, while you are advocating for perhaps some sort of a tiered structure, high value transactions are charged, there is a commission on that, but there is a competitive angle that Pranav was talking about. And also UPI has been such a phenomenal success story. Like, I mean, it's something that the government is also very proud about. So will there not be that populist pushback that if they go ahead and introduce this, regulatory charge?
Certainly there will be a pushback. There's no doubt about it. But what part of the segment are you charging? If you charge a fruit vendor, of course there'll be a pushback. And I'm not asking that there should be a charge on a fruit vendor. What I'm saying is that UPI today is benchmarked with a free service. And that is why that service is not valued in the ecosystem. So for example, take a Swiggy. A Swiggy knows that if I am ordering some food worth 5,000 rupees on Swiggy, the UPI transaction is free any which way. But if there was a charge mechanism that UPI did, there would be competitive forces coming in who may provide better payment services. And even if UPI charges some charge to it, that is a benchmark cost allocation that Swiggy will have to do to that payment provider. So I think that ultimately a service, if it is classified as free, will never get valued. But if a service is put some value to, then for larger transactions, it will do. What UPI has achieved and phenomenally achieved, 16 billion transactions last month, February 2025 actually. But if you look at it, it is a phenomenal way of shifting people to the formal system. I think the government has done their job. What had to be done is done now. We are so used to Swiggy. It's like Reliance Jio trying to offer you initially internet free. I know in my area, internet was free for the first few months, and now I can't live without it, and I pay whatever they charge me for it. So as a premium user, I think this country, as I said, is about inequality. It's a Robin Hood country. So at the end of the day, the people who are privileged enough should be paying for this service. The service will only mature. The government subsidy can then be diverted to slightly better people, and alternatives to UPI will come in, which will get UPI to upgrade its own technology. So there is nothing wrong in having a revenue model which enables people to provide better service levels through investments in technology, investments in risk. Think about the issues that may happen if these payments are incorrectly done and the technology is ignored. So I just think that while there are other ways of making money and people will figure out ways of making money, and banks may say, I will absorb the cost, but let there be a cost.
Let there be a cost. Got that. Thank you, gentlemen, for that. So two sides of the story. But there is that convenience, efficiency, speed angle, and perhaps there should be a charge for that. Thank you very much for joining in.